All right. I'd like to call to order the KCTCS Audit Committee meeting. We have several folks here in this meeting, and it's actually our inaugural meeting. So I'd like to take a few minutes before we go through the whole formal process of roll call and declaration of quorum, to ask each person to kind of introduce themselves and talk a little bit about your background and what your role is. I'll have the audit committee members introduce themselves first, and then the guests that are here. We do have guests from our internal audit firm as well as our external audit firm. Our representative is also on Teams, as is Jenna. So I'm going to start. My name is Lisa Damaris, and I am the chair of the Board of Regents. And I am in my 6th year of a 6-year appointment. I've served for 5 years on the board previously to this, and served in capacities as chair of the Finance Committee a couple times, and also served as the vice chair of the board for the past 2 years, and then was elected to the chair of the board. And so that started in June of this year, and I'm excited to be here, and I'm excited that the Board of Regents actually approved the formation of this audit committee, because I think it's super important. Probably one item that we haven't done for many, many years, or at least since the inception of KCTCS, that we probably should have been doing. So I was really pleased that the board, in its wisdom, was happy to create this committee, and I think we're all going to do some really great work together. So committee members, I'll start with Kimberly from my right.
My name is Kimberly Green, and I work in human resources at Somerset Community College, and I am a very newly elected staff regent. Chair Damaris asked me to serve on this committee, and I'm looking forward to serving.
Thank you. Jeffrey?
Okay, my name is Jeffrey Holliday. I'm a 94 graduate of Morehead State University and been a practicing public accountant since 1997, and I've done governmental auditing through 2005, so look forward to this and hope I can add some great input.
Thank you, Jeffrey. I see Jenna on the screen.
Yes, hello. I'm Jenna Scott. I have a master's degree in public administration from UK in public financial management, and then previously I've worked at the Legislative Research Commission. I started out my career with the State Auditor's Office in Georgia, then worked for the City of Covington as the internal auditor, and then since 2017 I've worked for Clark Schaefer Hackett, first in the consulting side doing internal audit work, and now my current group, we do internal audit compliance work for community banks in Kentucky, Ohio, Indiana, and now Michigan. So I'm very excited to be here with all of you. I guess be here virtually today, but I look forward to what we're going to do.
Thank you, Jenna. And then the other audit committee member who actually could not be here today is Russell Cox. He is a member of the Board of Regents. He is the CEO of Norton Healthcare out of Louisville. He'll be joining us hopefully as we continue meeting and doing the work of KCTCS, but I did want to mention his name, even though he was not actually able to be in attendance today. And then we have other staff members and guests here, so I'll go to my left. Start with Paul.
Paul Zarpata, KCTCS System President.
Pam Duncan, KCTCS General Counsel.
And we can just go around. Lance?
Lance Mann. I'm the Director of Internal Audit for the KCTCS Engagement. I'm also Director at Dean Dorton. I've been auditing colleges and universities, both from an internal audit, external audit perspective for about 16 years now.
Vice President for Administrative Services, Treasurer for the Board. With KCTCS before it was born. And Chair Damaris said she was starting her 6th year. I started my 36th year with colleges in some form of fashion.
Thank you, Wendell.
Chris Howes, recently joined KCTCS as the Chief Information Officer and Vice President.
Nice to meet you, Chris.
Thank you.
Anna Rivera, I am Chief of Staff for Regents Audit and also Board Liaison.
Thank you. And we have a spot for Dr. Williams, Dr. Chris Williams, who is the Chancellor. She's in another meeting right now, and hopefully will be able to join us when she is able to break free. Also on the teams, we have representative from Crow.
Yeah, good afternoon. My name is Brad Shelley. I'm an audit partner at Crow. I've worked with KCTCS for a number of years, I think 5 or 6 years now, first in a senior manager role and now in a partner role, and glad to be with you all today to present the results of the audit.
Thank you. Okay, I don't think I missed anyone in terms of the meeting participation. We do have some excellent support staff here, as we always do. Cindy's in the back, Amy's in the back, Keith's over there behind all the tech. So thank you guys for everything you do to make these meetings possible. I'd like to first start and ask our general counsel to call the roll so that we can record the attendance officially.
All right, if you are, well, I don't know that we can see them, but make sure that your camera is on so that those in the, there you are, in the public can see you. Mr. Jeff Holliday.
Here.
Ms. Jenna Sculp.
Here.
Chair Lisa Damaris.
Here.
Mr. Russell Cox. Ms. Kimberly Green.
Here.
Okay, we have 2 of our advisory members here, as well as 2 of our official members, and so we do have a quorum present.
Great. Thank you, Pam. Appreciate it. We're going to jump into a couple of presentations. One will be from the an update on the internal audit, and we'll ask Mr. Mann to do that. And then we'll also be asking for an update on the external audit. The committee is going to be asked to, once the external audit has been reviewed, to do a vote on a recommendation of that audit and pass it to the Board of Regents. So the Board of Regents will be meeting tomorrow as a full board, and we would take any kind of action that's voted on during this meeting to that board, and then that board will have to take action upon that. So there's really only one item that we're going to be asked to take action on. Before we jump into those, I just want to let you know that after we do these 2 detailed reports, under the new business section of our agenda, I'm going to be talking a little bit about this committee, how it's going to be moving forward, how many times we plan to meet, and how we might function under a committee charter. I think that's going to help the new committee members to understand roles and responsibilities going forward. And also for our guests, it'll help you understand kind of what our charter is in terms of what we feel our scope of responsibility is. And obviously staff as well will be informed on that. So I'll cover a lot of those sort of logistics after we go through the presentations. I do think it's important that we make sure we spend most of our time with our guests here to understand the information they want to present to us. For those of you who are on the board tomorrow, we will not be asking both of these folks to present again. They will present today at this meeting. There will be a summary of the presentation at the board meeting tomorrow, and then the one action item would be the one thing that's brought forward. So all of the other board members, if they want to see the detailed presentations, this is being recorded and live streamed, and they will have the opportunity to review that at their leisure. So without any more time on introductory items, why don't we start with an update on the KCTCS internal audit report.
Everybody okay with the temperature in here?
Good.
Get text, just make sure it was okay.
Yeah.
Good afternoon. Can everybody hear me okay online? Sitting yes, now, can everybody hear me online?
Yeah.
All right. So my name is Lance Mann. I am an audit director with Dean Dorton, do about half external audits and half internal audit. Have an expertise in higher education. We put together an internal audit plan, presented it to the Board of Regents in September. And this is the first update on the execution of that internal audit plan that goes throughout the entire year. I will start by going through kind of what we audited in this time period, some of the findings we had, recommendations we have, and then at the end give you a status update on the remaining parts of the audit plan that we'll report on in June of next year. So during this time period, we did 4 primary audits. The first related to more of a compensation analysis for system office, senior staff, college presidents and their cabinets. It's more of an information providing audit for the Board of Regents to be able to have some information about compensation and benefits available. I'll kind of go through how that's organized in this report, but it's more of an information providing. We do have a couple of observations that we'll share, but no findings related to that one. We did an audit over the transparency and the cost of attendance. This is to understand that the information students are receiving when they go to enroll in their classes each semester, what information that they're receiving, and is the fees they're going to be charged transparent to them at that time. We did an audit over credentials for mandatory credentials for senior and key personnel at the system office and at colleges. We've got, I think, one finding related to that I'll go through. And in the technology space, we did an audit over your remote access controls with more of your team members working remotely or with the ability to work remotely. That was on the internal audit plan to go and check those controls. All things considered, the audits went very well. KCTCS team members were very cooperative, got us all of the information we needed in the time frame that we needed it. And so nobody's pushed back or anything. Many times when we take over internal audits like this, there's some fear that we're here to get you. And we didn't feel that. Everybody was very cooperative and happy to have us here. So from a high level perspective, there's 3 levels of risks from a ranking that we can give you from a finding. One is a high risk finding. And I'm going to read these definitions to you this time. I may not do that every time, but just so everybody knows how I categorize things. A high-risk finding is a serious internal control or risk management issue that, if not mitigated, may, with a high degree of certainty, lead to substantial losses, serious violations of corporate strategies, policies, or values, serious reputational damage, and/or significant adverse regulatory impact. I know that sounds really bad, and it is, and that's why, in theory, you should not have a lot of those. Moderate risk is an internal or risk management issue which could lead to financial losses, loss of controls within the organization, reputational damage in the local and regional media, and other adverse regulatory impacts such as public sanctions or fines. And a low-risk finding is an internal control or risk management issue, the solution to which may lead to improvements in the quality and/or efficiency of the organization. Risks are generally limited. We also report in here, you'll see we have other findings. Those are things that aren't necessarily internal control risks that we see. They're just observations we think the board or audit committee would like to know about. So during these 4 audits, obviously the first compensation analysis I already mentioned did not have any findings. The transparency and the cost of attendance, we have 3 low-risk findings. In the credentials audit, we had 1 low-risk finding, and in the remote access audit around technology controls, we have 3 moderate risk findings, and I'll go through all those with you. So I'm not going to spend a lot of time on this audit over the compensation analysis since it is more information for you. There were some strengths identified. The Human Resource Department has this data very well organized. It was easy for us to get. We obtained contracts for the individuals within the audit. We compared it to what Human Resources provided us to make sure what they were giving us was accurate. Their team was very knowledgeable on the topic and willing to assist. We did not note any risks as we did this work. On the first page, this is where we have the system office personnel, including the president and his key team members and his cabinet. You've got your salary, executive allowance, and your car allowance. Other benefits, one individual receives paid life insurance based on their contract. Some individuals get conditional retirement health benefits depending on when they were employed within the organization. Those employed earlier in the organization get that benefit. Those employed later do not, and along with their contract information. And just ask questions as we go through it. If we go down to the next page, this is the individual college presidents and their contracts, same types of information around their allowances, benefits, retirement, contract end date. And then after that is where you'll see the cabinets for each of the individual college presidents and their compensation. These individuals are part of the same benefits package that a normal full-time employee would get, which is why we don't have that information listed separately for these individuals. And we did have one observation, and I'm scrolling to it for you all to be able to see. So there is some more data about the benefits for certain executive benefits around college presidents on page 13 that you can see. The only observation we had is that cabinet sizes are different throughout the institution. Some have 3, some have 8 within their cabinet. The titles are different. And so there's not really an apples to apples comparison when you go between each of the colleges. It's not a finding, just an observation for you all to be aware of as you go through and understand the data that we've provided.
Can I make a comment and ask a question?
Yes.
First, on the comment side, I do want to make the committee aware that on tomorrow's Board of Regents agenda, there is a policy recommendation going forward in front of the Board of Regents. And that policy recommendation has to do with establishing salary bands for the folks who are listed in not the college cabinet positions, but the college, yes, the unbanded folks. So that would include anybody who works directly for Paul Zarapata, which would be the folks that are in page 5. And then also any of those positions that report to Paul as well directly, and that would be all of the presidents, which are on page 6. And so those folks currently fall into an area called unbanded. They don't fit into the normal salary schedules that any of the president's cabinet folks would or anybody else. And we will be undertaking a policy to establish that for that group of folks. Relative to the system president, which Paul is the system president at this time, he is governed by a contract, and that contract is actually negotiated and approved by the Board of Regents. So we did already sort of, as you were doing your analysis, identify a gap in policy and hoping to get that addressed in our meeting tomorrow. The other thing that I'd like to ask about is I too saw the same observation that you noted in terms of college cabinet positions. And I'm sort of a spreadsheet gal, so I actually pulled the data from your report and started looking at president salaries, cabinet costs, number of cabinets on staff relative to enrollment at each of the different colleges. And I just wanted to try to get some perspective. And what I was looking at in just my rudimentary analysis was I didn't find a whole lot of correlation there, or rhyme or reason, basically. So in your experience, and I don't know if you've audited this particular item before, do you know of any benchmark data or any best practices around senior management, staffing, and support relative to enrollments or anything like that?
I don't know of any good data out there that would give it, because KCTCS is unique in many respects, not just here in Kentucky, but nationally. I would have expected, as an auditor of this, to see some more consistency in the cabinets across. Just my opinion, not an audit finding or anything, just I would have expected to see some more consistency, because KCTCS typically does things in a very consistent, organized way. And so that was surprising to me, but I don't think it's a negative if there's good reasons for each individual one. But I would hope that somebody is looking to make sure, with this data and other data, that there was thought put behind the individual cabinet positions within each of the institutions. In terms of are the salaries good or not, that's out of our realm of expertise. That would be something you would get a compensation analysis study done. And there's good HR consulting firms around the state that can do that for you.
Yes.
If I could just make a comment, one of the reasons could very likely be there's position consistency, but they may not necessarily be on cabinet. So when you look at the chief information officer is on cabinet at Jefferson, but not on cabinet at some of our other colleges. So that's.
Yeah, and I think that was the other thing that I noted was in some cases, the administrative assistant to the president was listed as part of cabinet, and in other cases, not. And I imagine each of them have some form of administrative assistant. So I think your point is very valid around consistency. It may not necessarily mean that there needs to be any change to the makeup of a cabinet, but we sort of probably need to define what is a cabinet and what positions fit in a cabinet, because it's very difficult to look at these numbers and try to make any sense out of them. I mean, I'm looking at, in some cases, enrollment numbers that are relatively low, and then a total cost of cabinet based upon this analysis that looks quite high. And so I can't make a correlation that makes mathematical sense to me. And so I think that's probably something that, I'd like to mention in tomorrow's meeting with the Board of Regents as we're talking about this particular item, that we need to look at the makeup of who is in cabinet, who is not in cabinet, and not to necessarily impose any administrative burden on the presidents themselves, but just so we can understand it mathematically, how it works.
We're happy to do a follow-up on this if there's additional data that we should add to it.
Okay, thank you.
May I make a comment about that as well? Coming from the college perspective, and as we're talking about, the cabinets are different at every college, a lot of that may have to do with historical data. When you have, certain individuals who maybe have risen to those positions, if they've been at a certain pay band or in a certain title previously, a lot of that, based on policy and procedure, may have allowed them to remain at a certain pay status or, something similar. So, and also in talking about how different, each of the colleges are and how they operate, the presidents do have a lot of jurisdiction as far as salaries and things like that. When it comes to the regulations that are administered by system office, we have to follow those, but the presidents do have quite a bit of leeway as well.
Yeah. And I think that's what we're seeing here is, as different presidents have come along, they may have defined some variability in terms of who makes up cabinet, who doesn't. And also they're responding, I imagine, to the needs of their local community as well. So in some cases, some positions are needed and others are maybe, could possibly even be a combined role of a couple of different disciplines.
Yeah, I think just to kind of go back on when I was looking at this last week, there are positions that we know are at the college that just aren't listed on here. And so I guess as the presidents make their decisions on how their cabinets are made, I look at marketing, chief information officer, executive assistant, and depending on how they organize, either a provost or a VP over student services or a chief academic officer. And then institutional advancement doesn't report at the cabinet level in all places either. So.
Right. Right. Well, good. I think we probably need to be prepared to speak to some of those. I anticipate the Board of Regents tomorrow might have some questions about that. Thank you. Our folks who are on the teams, I believe Hannah is watching because sometimes when we look at things, we're seeing the information on the viewer and we're not seeing you. So if you do have a question or comment, please raise your hand and Hannah will let us know so that we can get you back on the viewer and see you.
And I can see them if they raise their hand.
Okay, good.
All right. So our next audit is over the transparency and the cost of tuition. And this was really put on the plan because of a perception that some students, there's been some complaints or some students who, when they get their bill, they're surprised. And so we wanted to do an audit over, okay, well, what information are they getting? And should there be a surprise based on what they're getting at that time, based on what's published out on your website, what's been approved by the Board of Regents? We did have a few strengths. Personnel were highly knowledgeable about this area. They were able to provide us data and point us to the information very quickly. Your approved tuition and fee schedule is very easy to locate online on your website. And we noted no findings related to calculating tuition for individual students based on what is published. We do have a couple of findings that we'll point out that are more maybe to help reduce some of the confusion that students may be receiving. So the first is related to digital content fees. These may result in surprise charges for students. They're established at an individual faculty member's discretion, and the tuition and fee schedule does not mention the fees for digital content, or that the fees could be reversed at the student's request. And so our recommendation was, let's see what we can do to get digital fees put on your established fee schedule. Management has an action plan to add to the approved tuition list under general services for digital content with sort of the fee range, and add a note about students' ability to submit a written request to the bursar's office to have that, to opt out of the digital content. And they plan to do that by June of next year when you approve the next fee schedule.
Can I ask a question on that? If a student opts out, what is the impact to the student? Do we know?
It would vary for each class, but my guess is there's certain digital content that the instructor may refer to that they would not have access to in that case.
Okay, thank you.
A lot of books these days come with add-on digital content, and so that's kind of what it refers to. Online course tuition may confuse some students, specifically for out-of-state students. So they're specifically within your approved tuition list, an online-only out-of-state student rate. And I think it's listed at $179. What it doesn't say in that particular place is that there's also a $20 charge for being online only. And so you have to go to another part of the fee schedule to find that it's not $179 per credit hour, it's actually $199 per credit hour because it's an online only course. Since that particular line item was specifically for out-of-state students that are only taking classes online, our recommendation was to just change that to $199 because that's what it really is. Management has an action plan that's similar to that. They're going to add a bullet point right below the fee schedule for that particular line that says, in addition to this fee, there's also a $20 per credit hour fee for distance learning courses. All right. And number 3, and remember, these are all low-risk findings. do want to point that out. The last actual finding in this one is that student tuition account late fees we found are through interview and observation applied inconsistently between the various KCTCS colleges. We noted there were some that were receiving late fee charges, some that were not receiving late fee charges, and thought that could create confusion for your students. Management has responded to that, and they noted that some of the colleges during COVID opted to forego late charges. Some did not. Moving forward, KCTCS will review and provide training on the application of late charges for all colleges to try to improve consistent application. Any questions on that?
I agree it's a low risk, but I think I personally would like to see a consistency across the system. I wouldn't want a student who happens to be in the eastern side of the state paying late fees and one in the western side of the state not paying late fees. We're all one KCTCS, so, but I think it's a good recommendation. Thank you.
So I do have two other observations in this. They're not really findings because you're following the controls that you have in place. But based on the context in which you all wanted me to do this audit, I thought it was important to point out to you. So right now, when a student registers for classes, and they would be registering in the early summer for their fall classes. Those students won't actually know their cost of attendance unless they went through and manually calculated it until the charges are posted to their account in July or August. And the reason for that is you don't actually approve the rates for the fall until June. And so when I went into this audit, in my simple mind, doing a lot of purchasing online, I was thinking that I would be able to, students would click, add course, add course, add course, and at the end it would say, here's a summary of your charges. Do you accept yes or no? And that wasn't the case. And so they have to log into their account to go and see what it is 2 months after they've kind of enrolled. And KCTCS, I'm told, has tried to approve tuition earlier. I'm an active speaker. And for whatever reason, that was difficult to do. For those who enroll in the fall for the spring semester, they would go through the same process of enrolling in their classes. They wouldn't get that summary when it pulled up. What they would get is they could go in automatically or within a few days go and log into their student account, and their charges would be in there very quickly for the spring semester.
Yeah, so there's, if I could speak real quick. One thing is that CPE approves our tuition ranges. Right. And so CPE doesn't approve those ranges until I think May, is that correct?
Late April or early May.
Yeah. The second thing is that when you register, and this is going back to my old IT background, as soon as you register and you enroll, it does fire off the tuition calculation process, and you can click a link and go right to your account balance. That may not have been articulated to you, but it is there. Now, it doesn't automatically whisk you away to show you that. It's in a different part of the system, but I just wanted to point those two things out.
For the spring semester, it wouldn't tell you your charges for the fall semester.
Yeah, okay, I see what you're saying. Yeah, it would not have, because it doesn't know what the tuition rates are yet. Yeah.
Right.
This coming year, 22, 23, because CPE approved the rates over the 2 years, we would be able to bring them to you in March.
Mm-hmm.
But normally, like this current year in 21, it really wasn't approved to the fall until late April. So much like our biennial budget request, why we're having you ratify it tomorrow, because it wasn't done.
In your analysis, then, was there any explanation to the student as to why they couldn't see this, even if it was just a disclaimer on the page or something that says, account charges may, are estimated at this time and may change? Was there anything there?
So for the folks enrolling for the fall semester, There's not an estimated charge put on their books. They wait until the actual charge goes on. I don't recall seeing some disclaimer that said, here's why I can't tell you your charges at the time, or check back on this date to have it posted. It could be there, just not something I looked for.
Okay, thank you.
And so number 2 is kind of very similar, the same topic that we just talked about. Does anybody online have any questions about that?
Can I ask a question? Actually, this is Jenna.
Yes.
When the new rates are ready and, these are your charges for the upcoming semester, do they receive any sort of notification? I understand it would, they have to go in and look at their account, but hey, this is ready for you to view, even though it's, be further down the road than when they register?
I can't remember. You get electronic bill.
Sure.
Oh, I'm not sure she heard that. Oh, they get an electronic bill. I don't know if she can hear us or not.
Jenna, can you hear us?
Sorry, it's like cutting in and out. I heard like a word and then nothing and then a word, and I apologize.
There's apparently an electronic invoice that's generated. So once the charges are known, that goes to the students.
Then it's pushed out. Okay.
Yeah.
Thank you.
Okay.
All right. So we did perform a credentials audit over senior and key personnel at the system office. There is only one person there's 2 individuals at the system office that have a mandatory credential that they're supposed to have. One is Ms. Duncan. She's required to be an attorney. And while Paul's not required, I think, to be a doctor, we did make sure that he was a doctor. And so we did make sure that all of that. One thing we do have one finding that I'll point out is when somebody is hired, it is KCTCS Human Resources asks that individual to provide them evidence of their credential. Our recommendation is for KCTCS Human Resource personnel to do the verification independent of the employee. And management has responded accordingly in that case to get that into case. We did also go and check for other credentials throughout, those who had doctors and things like that, but those, we focused on the mandatory credentials that you had here at the system office.
And when you looked at this, was this limited to, this was key personnel at system office and colleges?
Yep.
So did you mean presidents of all of the colleges?
Yes.
Did you go any further below those presidents or just at that president level?
We checked for those who, any of your senior finance individuals who could potentially have had a CFO credential. We checked to see if they did. There were none. One, it's not a mandatory credential for that role. And 2, none of the individuals at that level had the CFO credential. There are plenty of people below that level that have a CFO credential, just not that senior finance individual.
Right. So to your knowledge, for example, someone in a business office didn't necessarily have to have a CPA.
That's right.
Okay. Are there any questions from the committee on this one? Before I have you move on, I do want to also point out that at tomorrow's Board of Regents meeting, there will be a policy that the board is asked to review and discuss and ratify relative to credentials for the system president as well as all the college presidents.
So we did have another observation here in our report that states, while this is your only required credential at the system office and certain other key roles, if you add new credential requirements, we would encourage you, the Human Resource Department, or you can ask us to independently verify that the credential exists.
Yes, and thank you, because I think the policy is going to address the gap in not having the credential in some cases. And then once we have it, absolutely an independent verification of that credential would, in my opinion, be in order. So I agree with you on that. Thank you.
And human resources can outsource that to their internal auditor, whether that be me or in-house internal audit, to do the verification for you.
Okay. All right, so Pam, you good? Okay. You will be joined by others in the crowd of people.
And finally, information technology. This is specific over remote access, so accessing the systems when you're not on campus, connected to wires at the campus or on the campus network. There were some strengths identified during this audit. The key ones were we verified that the SSL certifications used by KCTCS website domains and subdomains are using an RSA signature algorithm. That's really good, for lack not going into the technical criteria here. And you do maintain a VPN activity log for 14 days. And we performed testing on the log to make sure that it was accurate and up to date, and it was. We do have some findings. You'll find most any IT risk that we bring before this committee will likely, not always, but almost always be at least a moderate risk. And more of our IT findings are high-risk items than you'll see in a lot of the other areas, because technology is the name of the game these days, and that's how people are accessing information they shouldn't. So our first one relates to VPN. All faculty and staff accessing VPN go through a multi-factor authentication. Students also have VPN access, and they were not required to go through multi-factor authentication. There was also a remote access method on premise systems that utilized a VPN but bypassed the multi-factor authentication. And I can have my IT guy explain it to you, Chris can probably, but there was some backdoor way to get into certain systems. And our recommendation was, one, make sure students have to do the multi-factor authentication to get onto your VPN, and two, eliminate that hole. And management's responded accordingly.
And just for the record, I believe that's a relatively small subset of students that have VPNs because they're outside the country. Is what was happening, at least to my knowledge, when I was doing that stuff day to day, is that it would trigger all sorts of crazy warnings from Microsoft that we were, somebody was trying to attack us or something.
Second one, by default, faculty and staff at the system office are configured with VPN rights for remote access. Student and contractors who need remote access submit a request. An employee wanting to connect from a non-domain joined computer must also submit a request. We think that process is good, but our finding relates to that the documentation around that request wasn't always maintained in its completeness. There were some cases where we could find a request. There were some cases where we would find the request but not the approval. We noted one instance where the approver and the grantor of access was the same person. And so our recommendation is really just around carrying out your process that you have in place, the policy, and making sure that it's all documented appropriately. You've got the request on file, you've got the approval on file, and the person granting the access isn't the same person approving it. And then go through and audit any existing VPN access to make sure you have that information on file. Management has responded accordingly with those recommendations. And then the final one is we did a review of your TLS versions used by KCTCS websites. And we looked at these 4 websites listed on your screen and on your paper. Based on our testing, we found that kctcs.edu and mypath.kctcs.edu domains are using an older TLS version that has some known vulnerabilities, and we recommend updating those. And I believe that has already been done.
I was just going to ask, it says anticipated completion November of 2021, and it's December, so.
Yeah, I believe they did it within a week of us making the recommendation.
Paul, you're dropping your name. This is all obviously excellent recommendations, and being a former IT person, I could not disagree with any of them. One question I did have, and this may go back to another part of the audit plan that you're going to do in the future. When employees leave the organization, when you were testing remote access audit, did you happen to mention that part, or is that going to be a totally separate audit activity around the process of folks who leave turning off access?
That was a part of this audit.
Okay.
Yes.
And so there were no findings with that?
No, ma'am.
Good news. Okay, thank you.
So did anybody online have any questions about the IT portion? All right. So in terms of our update, the top section there are the ones that we've completed. Between now and December 21, we are working on, this will probably be at the end of December or the first part of January, 2 student financial aid audits, student status changes and return of Title IV funds. We received most of the data we needed to do those audits. I believe we got it this week, so our team's working on it over the next few weeks. And then in the procurement process, an audit over vendor existence and making sure you've got W-9s for them, understanding the process you have for checking vendor existence. There was turnover within the system office and the person we needed to work with on that role, and so that's delayed that one a little bit, but I think there's a new person and we're working on that audit now. Between now and when I report back to you next June, we're going to do an audit over the higher education emergency relief funds, primarily making sure that you're spending those things on allowable uses, both on the student and institutional portion. We're going to do a pro card activity audit, make sure that a sample of expenses that were on pro cards were for a good business purpose and were properly approved. We're going to do a conflict of interest policies and procedures audit for the board and cabinet personnel, senior key personnel, understanding what you have from policy, understanding how often conflict of interest disclosures are being made, how long are certifications about conflict of interest being made by board members and key personnel. We are going to do a human resource assessment, looking at I-9s, hiring practice, overload approval, and just general policies and procedures throughout the system. We're going to do a targeted business office audit at both Southeast Kentucky Community and Technical College and Big Sandy Community and Technical College. And we're going to do a bank reconciliation process evaluation and related testing. And then also, before I report to you in June, we also plan to do your FY23 risk assessment. So that way we're ready to start, if you all elect for us to continue in the new year, to start your internal audit plan on July 1 as opposed to October 1.
The only other question I have then is, and I know we had originally established reporting to this committee twice a year. Given the work ahead of you, do you feel that you would be able to do an interim report in, say, March of next year?
If you all would like for me to, I'd be glad to.
Okay. Just seems like 6 months is a long time. And knowing that you'll have to evaluate how much work you get done in this year's plan and determine if any of it needs to roll over to next year, I think it might behoove us to get an interim update in March. So we'll reach out to you and try to get that scheduled. We do have a board meeting scheduled for March. I believe it's like the 24th or something like that. Somebody can correct me. 25th. So if we could get that done, right just before that time, I think it'll be helpful to have that. I just didn't want to ask for a report if you felt like between now and then you weren't going to get as much done as you wanted to.
No, we could certainly be ready for another report with another 3 or 4 audits, maybe 5 between now and then.
Between now and third week of March.
Mhm.
Okay.
I am on vacation that March that crosses from March to April.
Mm-hmm.
I'll be in Disney, so I can't be here whatever those 7 days are.
Okay.
But I can send somebody else in my place if you'd like. I've got a manager doing a lot of the work, and he'd be glad to come as well.
Great. And we can certainly adjust the timing to, as long as we would have the update prior to the 25th, I think we'll be okay. So.
And then in terms of IT audits left on the plan, we've got 5 IT audits for Mr. Howes to put up with us, an IT governance and risk assessment audit, cybersecurity awareness and training, protective technologies, security continuous monitoring, and recovery planning. And those have already kind of been kicked off with a plan to get those done between now and the end of April.
Great. And Chris, since you're here, I'd like to give you a chance. Are there any specific questions you have about these audits? What's been done so far? What's coming up?
No, I thank you for the opportunity, Chair Damaris. I've reviewed the Phase 1 audit material with our teams internally. I feel like we have a really good plan going forward to address those. Item number 3, as was mentioned, has already been addressed. And we're getting ready to kick off Phase 2. So I think we're in a good spot.
Okay, great. Thank you. Guy who had your job previously left you in good shape, right?
Yes, absolutely.
He was awesome.
He was great. For those of you who don't know, it was Paul. He was the former CIO. All right, well, thank you so much. Appreciate your update. Thank you. And for all the work. All right. Next up is a report from our external auditor, Crow.
Thank you. Again, my name is Brad Shelley, audit partner at Crow, and again, glad to be with you to go through some financial results. So I think you have the information there. Do you want me to share my screen, or you currently I'm seeing myself on here twice, so. Or I don't know if maybe you're pulling it up on your side. Okay, there we go. So I think what's included in here is a high-level summary, and then in the attachment A is what we refer to as the SAS 114 or audit communications letter. Wanted to give a little bit of additional information. First, there's a number of reports included. I think that you have had a chance to hopefully look at the financial statements. There is a GAS report, a government auditing standards report, uniform guidance report. As I mentioned, the SAS 114 letter, a management letter, HB 622 letter, and a lease law letter. So a number of different deliverables to go through, and so several over 100 pages of reports to read through, but wanted to give you just a high-level overview of those. So I'll focus primarily on the financial statements and then the GAS and the UG reports. But again, if you have questions on any of the others, feel free to ask. On the financial statements, I always like to remind the committee, the financial statements are the responsibility of management. Our responsibility as an audit firm and an external auditor is to express an opinion on those financial statements. And so that's really what is summarized here on the screen that you're looking at. And then towards the bottom of the page is our opinion. And we are providing an unqualified opinion, which is the highest level of assurance that we can provide, meaning that these financial statements are free of material misstatements. You do notice the one emphasis of matter paragraph in here that is new this year. That's just disclosing that you adopted GASB 84 and there was no changes in our opinions based on that. That was just related to fiduciary activities. And so you'll see that information within the financial statements. And we can go through that momentarily. Again, at a high level, no findings are included within here. If we kind of skip through a few of the pages, if you get to the statements of net position, I think is page 13, which I'm not sure what page it is in your handout here, but total assets are about $1.4 billion at June 30, 2021, compared to about $1.3 billion in the prior year. So we see a nice increase in total assets and deferred outflows year over year. The total net position at the bottom of the page has increased from about 664 million to about 834 million. So again, a nice increase year over year. And the one thing that's notable there, especially, is when you look at the very last category there of unrestricted, that actually went from a negative 136 million to a positive 16 million. And so you may recall several years ago now that when a couple of new GASBs were implemented, GASB 68 and then GASB 75 related to pension and then OPEB, that resulted in some significant liabilities going on your books related to those, the pension and OPEB. That took your net position at that time to a negative. Now through a combination of things, really, some changes in assumptions, some changes in some of those plans, and then some additional federal funds, you see that has now grown to being a positive again. So a good thing for sure, but a few things to keep in mind, and we'll talk about that briefly in just a few minutes. On this next page, the statements of revenues, expenses, and changes in net position, really similar to an income statement. The key thing to point out here, again, just at a high level, towards the bottom of the page, you'll see that your change in net position or your net income was a positive 169 million this year, compared to the prior year was a positive 101 million. So a number of different things related to that and what drove that change. The biggest, though, being the additional federal funds that you receive through HERF. So your federal dollars year over year, the federal and state grants and contracts increased by about 80 million this year. And so that comprises most of your increase in change in net position for the year. I won't go through all of the footnotes, but I did want to skip through a couple of pages ahead to the statements of fiduciary net position.
May I ask a question before you do that?
Yeah, for sure.
This might be better answered by Wendell. Where is he? There he is. Okay. I too saw the federal state grants contracts up quite a bit, so assumed that was federal CARES HERF money, right, that came in. Couple of questions that I have. Way up on operating revenues, student tuition fees, obviously see a decrease from 2020 to 2021. Is that reflective of enrollment decline?
Rate tuition is flat for 21, 22, as well as declines, if you will, in our enrollment. So that's why you see less tuition revenue.
And then my other question was under operating expenses, our instruction seemed to be quite a bit higher than last year, 168 compared to 146.
Largely because we're buying PPE, we're buying all types of instructional equipment in order to do social distancing, whether it be, more microscopes, more lab items, all of those things in order for us to be able to teach the smaller class all during COVID.
Okay.
And that's primarily what those federal monies were for.
Okay, great. And then way down the bottom under additions to endowments, that was a pretty big jump from 470 to 2218. What was that?
Market.
Was that
Market gains. Yes, ma'am. Market gains for year over year, June to July. And you'll see on the quarterlies, you'll see some adjustments come down from, for example, September was not a good month.
Right.
So you will see some of that reflected when we go through the administrative services report.
Okay, because this is a June 30th report, so
Yes, ma'am.
just wanted to make sure everybody realizes
Right.
that. Okay, thank you.
And you will also see income come down in 21, 22 because interest rates have gone down significantly as well. So our investment income will come down quite a bit.
Come down. Okay, thank you.
Any other questions on these couple of statements before we move on?
I have a question on statement of cash flow, so I didn't know if you were going to cover that or not.
Go ahead.
Page 16. Again, it's probably going to be Wendell answering this one.
Sure.
Non-cash capital activities, donated capital assets, that seemed to be quite a bit higher year over year. What was that donation, do you recall? That'd be great, thank you. That's all I had.
Okay. Any other questions from anyone else?
Wendell, would that have been the SPEDA donation?
Yeah, it just seemed to be a big jump in number. So it could be a combination of things, but be interesting just to know what that is because it's not cash, you know, sounds more like it's land or buildings or something like that. Yeah. Yeah. Thank you. I think back to you.
Okay, sorry, I'm not able to hear some of the other, like when Wendell was talking, I couldn't hear him. I'm not sure if the other remote participants could hear him or not. I could hear him the first explanation, but then after that, I couldn't hear anymore.
Yeah, he's going to follow up on my question for donated capital assets. It just seems to be a pretty big jump year over year. And, you know, obviously it's not cash, so it's something, and it's probably land or buildings or some combination of those. I was just curious as to what that was.
Yeah, and I don't recall offhand either, but I wasn't sure if he was still talking or not, so sorry about that. So this page and the following page are the two new statements in the financial statements, the statements of fiduciary net position and changes in fiduciary net position. These are the result of GASB 84, and this is really just the financial information for the OPEB trust. And so what GASB 84 required was really for any funds that were being held where the primary government, in this case the system, was the fiduciary for those funds, then they needed to be included as a fiduciary activity. There was already some guidance similar to that, but it wasn't quite as clear and not as encompassing. And so what was found a lot of times is a lot of varying types of reporting. So some entities were reporting pension and OPEB trusts, others were not, depending on certain circumstances. And what GASB 84 did was really try to make that more consistent and make sure that everyone is reporting those. Now, again, it's only pension and OPEB trusts where you are the fiduciary. So for the KTRS or the KERS plans, You're obviously not the fiduciary of those. Those funds are held at the state level, and so they're not included here. This is just the KTRS, or sorry, the KCTCS plan. So it's just the assets, the investments that are being held, and then on the page that you're looking at here is the additions and deductions from the trust during the year for primarily investments and then benefit payments. On the next page is the start of the notes to the financial statements, and nothing really too significant to point out here, although again, as a new committee, if there are certain footnotes that you had questions about or wanted me to discuss in more detail, I can certainly do so. But really, for the most part, these are similar footnote disclosures as has been required in previous years, and so it's mostly just updates to the numbers. But if anyone have any questions on any footnotes?
I don't see any.
So if no questions on that, we'll move ahead to what I believe is page 64. Sorry, page 62 is the start of the required supplementary information. These pages are all related to the pension and OPEB liabilities related to the various plans. So the KTRS plan, the KERS plan, those are all included here. Again, no changes. These are eventually will be 10-year schedules. I know you're still scrolling through there, so I'll pause for just a moment. There we go. So these are all 10-year schedules. Obviously, at this point, I think most of them are either in year 4 or year 7. Eventually, once we get to 10 years worth of information, it'll just be a 10-year schedule from there. This is just providing historical information about each of the plans and the activities of those plans. If you scroll down a few more pages, we'll get to the schedule of expenditures of federal awards. Maybe in the short form version, so I'm not sure if you have the uniform guidance audit report in here or not. Yeah, there we go.
Yeah, we should, there we are. Got it.
Okay. So if we scroll down through here, we should get to the so this is several pages long. Obviously, you have a good number of federal grants, starting at the top with the largest volume of student financial aid cluster, and then a variety of other grants through here, including the FERF funds, which are also significant this year. Get to page, I think 76 on mine at least. We'll see the total federal expenditures for this year is $356 million. So again, a very significant amount of federal dollars included in there. As I mentioned, is all of the HERF funds, which is about $115 million. And so, you know, I know Nancy was mentioning the internal audit report, they're going to be doing testing over that as well. I think that's probably a good idea. There's no doubt going to be more scrutiny over those funds. We did testing over that as well. And so once we get to the reports, we actually did testing over 5 major programs this year. Student financial aid, which we test every year, the funds that we talked about. We also tested the coronavirus relief fund, which was additional COVID funds, and the higher education institutional aid and temporary assistance for needy families. So the way it worked out we're required to test all of those. There is a process that we're required to go through to determine which are major programs and which are not. In this year, Coronavirus Relief Fund and the HERF funds were both deemed as high risk by the OMB. So with those being deemed high risk, we automatically had to test those based on the dollar amounts that you expended. Obviously, student financial aid is significant dollars as well, and so we tested that one. The other two were much less than dollar amounts, but nonetheless were based on the thresholds, were considered type A programs that hadn't been tested in more than 3 years. And so we were required to test those programs as well. So we do have a couple of reports in here. And so if you go down a couple more pages, I think we get to the first report. This is the independent auditor's report in accordance with government auditing standards. This report is specifically looking at your financial statements and internal controls over financial reporting, and then compliance on the next page. And so, again, we have no findings here, compliance matters to disclose. On the next couple of pages is the independent auditor's report on compliance with each major federal program and related internal control over compliance of those major federal programs. So again, this one is specific to those 5 major programs that we tested. And so here is where we would disclose any compliance issues or internal control issues related to those. And so we are happy to present that you do not have any findings associated with those 5 major programs that we tested. So no compliance issues and no internal control issues that rose to a level of a significant deficiency or material weakness. So very positive news there. One more page and you'll get to the schedule of findings and question costs, which really just gives a summary of all that information. So, you know, the X's are on the no or non-reported side, which is a positive, until you get down to the bottom, and then you do qualify as a low-risk auditee. So positive from that standpoint. Any questions on any of that? I do have a few other things I wanted to mention before we moved on, but wanted to see if anyone had any questions on the uniform guidance part of the report.
I don't have a question, but I'll give you a full disclosure admission. I go straight to page 84 and I'm looking at the X's. And if I see them in the wrong column, then I'm digging deeper. But
yep.
Just a congratulations to Vice President Followell, his team, and all the work at the colleges, because this is an amazingly beautiful page 84 where everything is no except the bottom, which says we are a low risk auditee, and that's fantastic news. So congratulations to you, your staff, and all of the staff at the business offices throughout the colleges. This is the best you can get on these kind of programs.
Yeah, I would echo that. They do a great job, you know, in working with them. They're very detailed. They ask a lot of questions. We have a lot of good communication throughout the year, so that if they're, you know, if they're unsure about something or they have a new significant transaction, or, you know, especially as they work through the process of the HERF funds, you know, if you've been involved in those conversations at all, or and tried to read through the grant agreements or the lack of clarification on some of those, it's very challenging to understand what is sometimes an allowable expense and what is not allowable, because the guidance that is out there is minimal and is often somewhat vague. So we've had a lot of conversations throughout the year about some of those, but from their standpoint, they're very, very proactive in asking questions about, you know, would this be an allowable expense? And oftentimes they're also reaching directly out to HERF, which is obviously very valuable. So I would echo your sentiments there. Very great job. other things I wanted to mention, just financial statements related. One of the things that I mentioned was there was a significant increase in the federal and state grant funds of about $80 million, and obviously about 115 million in HERF funds. And you still have additional funds that are out there, right? So I think that's important to know as you move forward, that you do have those funds available. However, as you also saw from one of the questions that was asked that Wendell followed up on was, you do have additional expenses that are out there as well that cover a lot of those. And so a lot of the funds, my understanding, a lot of the funds that haven't been spent yet have already been earmarked either internally, or they are for hopefully one-time payments or COVID-related issues, very specific COVID-related issues. And so while it looks great that you have all these additional funds and the increases in revenue are great, I think just I've been trying to make sure that I mention to any audit committees and boards that that's not likely to continue being a source of revenue long term that you can count on. Maybe we'll be surprised, but as of right now, there's definitely a cliff that's out there of when those funds will dry up and things will be back to normal from a funding standpoint. Another thing to mention, and I mentioned this kind of from a positive standpoint when I was talking about the net asset, or sorry, the net position that had moved to a positive in unrestricted balance this year to a positive 16 million. And a lot of that is related to, like I said, the increase in federal grants or state grants or other funding, but is also related to pension and OPEB and positive market swings and changes in assumptions that have each year that we've seen both in the KTRS and KERS plans that have actually decreased that liability year over year and had a positive income statement effect on your financials. And so, for example, in the current year, there was about a $43 million credit or reduction in expense that, again, primarily relates to changes in assumptions and changes in those deferred inflows and outflows that isn't an actual cash inflow, but is showing up as basically a reduction in expense on your financial statements. And so that's just another thing to keep in mind when you're seeing the positive change in net assets, and that it's so large, is there is that's flowing through there as well. And on the flip side, that could change very easily in the other direction, depending on discount rates or healthcare trend rates, things like that. So that's, again, something, it's great that it's creating a positive change in net position currently, but something to keep in mind. And similarly, as you look at your own plan, the KCTCS OPEB trust, and that is currently overfunded as well. Again, there's assumptions and discount rates and healthcare cost rates that could change throughout there. And you don't have to necessarily pull it up, but on page 59 of the financial statements there, you'll see that the OPEB asset that you have related to that is currently about $32 million. So it's about $32 million overfunded currently. But a 1% decrease in your discount rate could actually take that from a $32 million overfunded down all the way down to about a little under $7 million. Similarly, on the bottom of that page, you'll see that a 1% increase in healthcare cost rates can actually decrease that from 32 million to about $4 million. And so I point all that out just as a bit of caution, I guess I would say, because while the numbers look great now, and I don't want to say that KCTCS isn't doing a great job of being fiscally prudent and managing your money. Just as things are in a constant state of flux and you still are in the middle of a pandemic and we see inflation rates rising and not sure how that'll affect, the discount rates or healthcare cost rates in the future. Those are things to keep in mind, I guess, as you're planning and moving forward. Any questions or comments on any of those? If not, I just had, I think, one other thing. Last thing, financial statement related, is I always like to mention what's on the horizon, right? And so I mentioned from a financial standpoint. From an accounting standpoint, the big challenge that's on the horizon is GASB 87, which is related to leases and really changes how you account for those leases. Currently, the majority of your leases are treated as an operating expense or an operating lease, so they're just expensed as you make payments, or in cases where you're potentially leasing any assets, you're treating that as revenue as it comes in. GASB 87 will, at a high level, essentially treat them more like a capital lease. So you'll essentially have an asset and a liability that'll come on the books. There may be some net impact from that, but what you're likely to see is a much higher asset and then a corresponding liability or deferred inflows related to that. And so just wanted to bring that up as a heads up. I know we've been working with management for several months now. Again, they're very proactive and we've had a lot of discussions about that. There's a lot of additional work that they have already done and will continue to have to do to gather all the leases, all the potential leases, track how everything should be recorded, and then track that continually moving forward. And then there'll be additional work, obviously, from an audit standpoint as well, in testing all that information. But just wanted to bring that up as well, because that's a very significant, time-consuming GASB that'll be out there and is actually effective now. From an audit standpoint, it won't be effective until your June 30, 2022, but technically is effective now.
So
Any
much
questions?
like the pension liability that came on, this is going to basically add up all the leases in one big lump and come on.
Yes, the only difference between, the biggest difference there is you'll also have a corresponding asset. So there shouldn't be much of a net impact, whereas on the pension and OPEB, you really only got the negative side of that. You had to book the liability. There was no corresponding asset in most cases that you got to record. Here, there will be an asset and a liability that'll essentially offset each other. There'll likely be some net effect, but not near as significant as what you saw with the pension and OPEB.
That's good.
Right. The last thing I had then is, I think, was the first thing that you had pulled up, which was the SAS 114 letter. So I'll give you a second to pull that up. That was that attachment A. Yeah, so I just wanted to run through this at a high level. Again, it's just, the first page is just outlining our responsibilities under the auditing standards, both general accounting or general auditing standards and government auditing standards. We are communicating that we are independent from the system. We don't have any other relationships or work that we're doing with the system that would impair our independence, which is obviously important. On the next page, this just goes through some of the plan scope and timing of the audit, and some of that background information on how we go about planning. Towards the bottom of the page, this is where we would disclose any significant accounting policies changes or management's judgments or estimates. And so nothing really significant here. We do note some significant accounting estimates, but really what we're looking for here, as you go down to the following page as well, is that that the estimates are consistent year over year, and that's what we're really looking for, is how you're calculating those are consistent and reasonable. Towards the bottom of the page are a list of some various items or judgments, and again, so if we had noted any inconsistencies in disclosures or accounting policies or things like that, we would be sure to notify you. We did not identify anything like that, so nothing to note there. And then the top of the next page is probably the other place. You mentioned looking back at page 84, 85, whatever it was, and seeing the check marks on the right-hand side. This is probably the other place that often gets looked at quickly to see if there were any audit adjustments. There were no corrected misstatements or posted audit adjustments. We did have one uncorrected misstatement, which was just a waived adjustment, and this was really a timing issue, revenue recognition related to some of the HERF funds. So the institutional portion expended was actually higher than the student emergency aid portion. So technically that was supposed to be deferred rather than recognizing it as revenue. As you can see in the last sentence, or the second to last sentence, the impact of this was really the unearned revenue was understated. Federal grant revenue was overstated by the $14 million. There's no impact on the schedule of federal awards or the eligible federal expenditures because it is reported correctly on the CFA, but for revenue recognition purposes was not recognized correctly. Again, this is a timing issue. It doesn't mean it's not allowable revenue or anything like that. It's just a matter of the way it's recognized as revenue. And so you'll see this kind of flip then in the next year because you actually recognize it this year instead of you should have recognized it next year. The last section that starts in the other communications and then finishes on the next page, just a variety of information again. There is some other information included in your report, the management's discussion analysis and the officers listing are included in the audited financial statements. No inconsistencies that we noted there. Those are unaudited information, but still in there nonetheless. And then the next page goes through just a variety of, if we had any difficulties or disagreements, again, we would have made you aware of those. We did not have any of those issues, so very clean and good process. So again, we appreciate working with management and with the system. I think, again, they do a great job of being prepared for us and being very proactive. I would say probably one of the most proactive clients that I have, just as far as being prepared and asking questions and making sure that everything's in order and that we have a good audit calendar in place to make sure that we are able to finalize the reports on time. So that concludes my presentation. But if anyone had any other questions, I'm happy to answer those.
Thank you, Brad.
You're welcome.
Are there any questions from the entire committee? Because as I mentioned at the beginning of our meeting, I am going to be asking for a vote that will be put forward to the Board of Regents. What I need to clarify is that the vote is basically going to be me and Kim, because as Board of Regents members, we're the only ones who can bring a vote forward. So for Jenna and Jeffrey, you're not Board of Regent members, and so you actually can't vote, but you absolutely can comment and give us your thoughts and feelings about this audit. So prior to me calling for that vote, I'd like to ask each of you if you had any questions, thoughts, comments about the external audit that you want to share.
Sure. I mean, I'll go first. I think it sounds like it was a very good report, a clean report, and I think it speaks to the system that staff was very agreeable and willing to answer questions, provide information.
Thank you. And Jeffrey, did you have anything?
I had some time with it last week, and I do I agree with your schedule of federal findings. It's always good to see that basically there is none. And from an auditor standpoint, it's also good to hear, like Brad said, well, hey, the 1% we've got some positives, but also to let you know, well, hey, they can turn negative. So, that way you're not overly optimistic, but then you're proud of your people and your staff. They cooperated and they were full benefits, and glad to hear you didn't have any trouble.
Thank you. That's an excellent observation, and it's important, and I appreciate you, Brad, bringing it up, because we will be discussing in tomorrow's meeting an agenda item related to our OPEB trust. I think, it's important for the entire board, while you look at numbers that are happy and good numbers. And I wrote it down, Wendell, a 1% change in the cost of medical costs could make that number look not negative, but not kind of gnarly, yeah. Thank you. Thank you. All right, I appreciate everyone's questions and comments. Absolutely appreciate the reports that were giving to us today. So I'm going to formally ask, and we will have a roll call vote. Pam Duncan is going to call the roll of 2 people. So I guess I'll need to make the motion, because I need a motion in a second. So I'm going to make the motion that the audit committee recommend to the KCTCS Board of Regents that the KCTCS Board of Regents accept the 2020-2021 annual external audit. I need a second.
Second.
Thank you. Kimberly seconds.
Vote. Chair Damaris,
Yes.
Bob is not present. Yes. Vote is unanimous. There's majority.
Thank you. Quickest vote we do. Votes take the long. And so finally, I just again want to thank everyone for your participation. This has been great information and really helpful to have feedback from Jeff. Really truly appreciate it. Just there's a new business item on the agenda here. Be working on a charter so that we more formally define our role and responsibilities. I have some experience with that. I know Jenna has some experience with that. I'm sure Jeffrey has seen those as well. So we'll try to work as a group, bring forward our experience with developing charters in the past and try to work on that electronically. We'll certainly need to adopt it as a committee when we meet next, but we can do drafts and reviews electronically. I am considering at this time at least another meeting in March. I mentioned that earlier, just to give the internal audit folks an opportunity to give us an update prior to the June update. So we'll get to you with a date on that. But that agenda item will probably focus on internal audit and hopefully a review of the charter, which would be probably the best use of our time. Before we get ready to close out, the agenda does list the next meeting is June 9th, 2022. So make sure you have that on your calendar. We'll get to you about a March date and see if we can work it out with everyone's calendar. I want to ask if there's anything that General Counsel or Paul need to add before we close out? Wendell? Chris, welcome. Do you want to add anything else? You're welcome. All right. I will ask for a official adjournment. Again, this is a roll call vote, right? So I make a motion to adjourn.
Second.
Okay.
All right, Chair Damaris
Yes.
and Regent Green.
Yes.
We are adjourned.
We are adjourned. Thank you.